Welcome to today's video technical update presented by CMS Forex. It is Friday, December 11th, 2009. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. The greenback looks to extend its recent strength, and we'll take a look at the Euro Dollar, US Dollar Canadian Dollar, the US Dollar Japanese Yen, as well as the Euro Pound pairs. This video is being prepared at about 6:30 p.m. Eastern Time after the close of this week's session. The first pair is the Euro Dollar pair, and we see here in the daily time frame that it has broken, first of all, it has broken this long-term trend line a couple weeks ago, and this week it's broken a 50-day moving average, as well as some, closer, shorter trend lines such as this. This is a slower trend line. It's also broken, and now we're at this previous power line. That was the resistance of the previous this congestion pattern. So it looks like the market is breaking it, and also the aggressiveness of these bearish candles suggests that there is further decline. This is an intermediate target, the 50% retracement level, which is this previous high here. This is an important level here at the 1.40 or 1.38 area. Okay, so that's the longer intermediate term outlook. Now in the 4-hour time frame, we see that we see a bullish divergence, and there might be some support between 1.45 and 1.46. So next week we may see some support, and if it breaks, we'll see some further decline here. Now when there is support, we would like to see a rally back to this previous consolidation area and top off there and continue declining. That would be a confirmation of this week's breakout signals. So once again, if the market comes down to 1.45 and rallies and tops off here in the previous consolidation area about 1.48 and then starts to decline, then we are it's more likely that the market can reach the 1.4 area. Alright. The next pair is the US Dollar Canadian Dollar pair, and we see that since yesterday testing the support, the market has rallied, and in the morning there was a post that talked about this break and a possible throwback, back to this area as support. Now the market has been very aggressive, and instead of retracing here, has already gone through the previous highs here. So now we see some kind of short-term reversal pattern. So maybe instead of here, we may see more of this type of action instead. So to start next week, there might be some earlier short-term bearish outlook, but ultimately we may be testing this resistance area, this retracement resistance, as well as the coincidence of this downsloping trend line. And of course, a break of this trend line would be a very significant bullish signal, but before that, we're basically in a consolidation pattern, and this would be a resistance slightly below the 1.07 area. Now we turn to the US Dollar Japanese Yen pair. Last week we were at this area, and we anticipated some resistance here at the 91 level. And this week that materialized, the decline materialized. We see a harami here, and then a 3-day decline down to the 87 area, 88, 87. So here we have another reversal pattern. Here is a harami and has a confirmation, a bullish confirmation. So the market now has confirmed our previous week's last week's break. So this was our break, this was our bullish signal. The market had a throwback, and then now the market looks like it's ready to continue. So our projection for this rally would, a swing projection matching the previous swing would be towards this area, the 93 level, which is also the 61.8% area, and it may be coincident with this downsloping trend line. So in a short-term view or short intermediate outlook is that the market will rally to 93 area. But a longer-term outlook is that there will be resistance here, and the market basically is in a downsloping channel, and there may be very strong resistance at this 93, 94 area. But we do see that the short intermediate term bearishness has subsided, and we may be in for a short-term bullish action. Looking at the 4-hour time frame, we see here we may have one more dip back down to the 8750 area before continuing to rally next week. See, we have our stochastic overbought turning back, so we may have some minor near-term decline before our short-term rally, and then in the intermediate term we may have resistance here indicating subsequent decline. But again, next week we're going to stalk this rally and see where it goes from there. Finally, we have the Euro-Pound pair, and we have this Elliott wave count that we started a couple weeks ago, and it's still valid. We're basically still in this subwave, second subwave here within our fifth wave. So you see 1, 2, and probably 3, 4, 5 to complete this fifth terminal wave here. Now, so this is the count, and we have projected this decline to about the 0.89, 0.85 area here, which is 50% retracement before the market can rally. So this week it's holding up that outlook as we consolidated for most of the week, and but today we saw this very strong bearish candle, and that broke our week's slightly upsloping trend line. So now we have our projection, swing projection, that would bring us to about the 0.8950 area. So this area, which is also 61.8% retracement of this swing, will be tested as support, and if the market can bottom here, it may rally and test this resistance. So right now the Euro Pound looks to continue this wave 2, and if it completes here and breaks this trend line, then our outlook here towards the third subwave of wave 5 will be confirmed. At the moment, we're still stalking this decline to see what price action would occur at the 0.8950 area. Then we want to see what the price action is going to be like at this declining resistance. Alright. That wraps up today's update. The rest of this week's technical update can be found on fxtimes.com, along with other fundamental analysis and recordings of live events. Once again, I'm Fan Yang, your technical analyst here at CMS Forex, wishing you a great weekend.